Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 44,184, down 2.62%. Ethereum trading at 29.82, down 3.14%. My goal is to assist you to be more of a financial blessing and create real wealth for yourself and those you love. We can see the market is pretty red now. Look at this unusual one, Head G. That looks interesting. Link is down 7.45%. Theta down 6.2%. I do leave little clues, but by the way, don't pay any attention to Head G as a real investment for now. The goal of our community is the pursuit of real wealth. Real wealth is much more than money. Money is really important, of course. Money is security. But what is security without fulfillment, meaning, inner and outer peace? Not much. Our community focuses on fearlessness, integrity, decency, kindness, authenticity, courage, honor, many different things. What real wealth is really about, it's much more than just money. Make probabilities your trusted advisor, not fear. Fear is really debilitating. It can stop you dead in your tracks. It's really important to immunize yourself against fear by using probabilities. Please be aware of scammers. If anyone asks you for money claiming to be me or representing me, they are a scammer. The only donation page I have is this site. I'd just like to say a very warm thank you to the very generous people who have donated to me on buymeacoffee.com/cryptotradingks. I very much appreciate it. Thank you. Over more than 20 years of trading, I've literally created thousands of rules. Rule 174 is an important rule. The T-cube method, trend timing and trigger. We're going to look at trend. Through the KS process, getting a feeling of how the economy is moving is a really important part of the process. Fed signals asset purchases likely to slow this year. Let's have a look at this article. When I look at this particular headline, I get a warning light come on by the word likely. Likely to slow this year. Doesn't mean will slow this year. I like to highlight in red what I call the red flags. The green is in things that actually are going in the favor of crypto. Yellow is kind of in between. It's like a traffic light system. Let's have a look at those reds. Later this year, lingering differences, exactly when to pull back support, emerging consensus from the Fed meeting. Emerging consensus doesn't mean there is consensus. It doesn't mean anything, literally. Provided that the economy were to evolve broadly as they anticipated, means pretty much nothing. Could be appropriate to start. Appropriate doesn't mean do. Several officials favored coming months, others end of next year. Stronger evidence that the job market had healed from the pandemic. You can see just how waffly this language is in terms of not giving its reader a clear direction. That's certainly not the problem with the Wall Street Journal. It's how the Fed speaks. It's called Fed speak. It's really well known. Fed officials expect a temporary burst in inflation. We know from our analysis that inflation and Bitcoin move quite well together. The inflation spurt has been stronger and broader than expected. Just an interesting point, the Fed cut interest rates to 0 last year, began purchasing $80 billion a month in treasury securities and $40 billion a month in mortgage securities to provide added stimulus to the economy. Most officials don't think that the labor market has met the substantial further progress threshold. The meeting occurred before the Department of Labor reported an increase. Economy added 943,000 jobs, and the unemployment rate fell to 5.4% from 5.9% in June. critical point underlined in gold. The Fed's next meeting will be September 21st to 22nd. Again, some red flags. Several Fed officials commented arguing in favor of beginning to taper bond purchases, but the minutes do not reveal consensus for such a step. That means there is no broad-based agreement that after the Fed meeting in September 21 to 22, they will actually taper. We can see some gold things here. Suggests a reduction is more likely to come after the November 2nd to 3rd meeting. Also, this is more Fed speak. Jerome Powell will ultimately have to put his foot down and make a decision on the timing. That stands in stark contrast to some of the things that were mentioned above. Julia, a former Fed economist, says there isn't an urgency to get started as much as there is an urgency to get it right. Very fair. Also, officials must consider the pace of any reductions in asset purchases. This is the reality of the article. The Fed has said it will raise rates from their current near zero level once, 0.1. They are confident, 0.2. They have to be confident. Inflation will average 2% over time, and a second part of that the labor markets are consistent with full employment. So you can see there are two tests that the Fed is actually employing here. One really interesting thing, the minutes didn't offer any significant detail on the likely pace or composition of any tapering. This is just really helpful for you to know. Methods defeat fear. What I just did with the analysis of that article, I was looking for very specific things. I was trying to determine signal versus noise. Signal is really important. That's what we need to look at. Noise is all the things in red, and there was a lot of noise. Let's have a look at the S&P 500 gold and Bitcoin. S&P 500 is up 30% for the past year. Gold is down 8%. Bitcoin is up 273%. It's really important to understand the Bitcoin trend. We're looking at the early warning system to see if anything is changing. Let's first start with Bitcoin's technical analysis. Bitcoin is currently trading at 44,277. It's just down here near this support line. We can see Bitcoin has been coming down, but I mentioned that that was realistically to be expected. Bitcoin has gone up so much in value. Having a wave down just makes it a really healthy rally. I mentioned that any reduction to between 42 to 43,000 is completely fine. It doesn't cause any problems. Next, we turn to the KS model, which is a crypto technical trading model based on institutional price psychology. We're in the bull market psychology segment over here at the moment. We can see we're about mid-cycle. Comparing it to the last bull market run, we can see the exponential nature of blow-off tops. They are the hallmark of the end of a rally. We're not seeing anything like that right now. If you're new to the channel, I'd recommend that you read the Medium article. The description, the URL, is in the description of this video. The KS model predicting Bitcoin at 486,000 by May 25th, 2022. In this particular article, we talk about institutional versus retail psychology. They are very, very different psychologies. There are a lot of really cool rules in here, things that you can look at. But what's really important is the explanation of the different components of the KS model. You can see many people have commented on it and looking into it. I just want to take you down to the bottom so that you can see the actual current projections in terms of Bitcoin's adoption through the technological adoption curve. Bitcoin is really the representative of digital assets. Digital assets are growing far more quickly in terms of adoption than the internet ever did. Digital assets are really the upgrade of the internet from what we know now to the internet of value. I'd just like to share another article from the Wall Street Journal with you. Robinhood revenue surges on cryptocurrency trades. It's really interesting reading this article. Robinhood Markets, their revenue more than doubled in the second quarter. Roughly 63% of the company's customer base with funded accounts traded digital assets in the second quarter. Robinhood earned $233 million in fees from routing customers' cryptocurrency trades to high-speed trading firms, with Dogecoin accounting for nearly 2/3 of the volume. This is up from $5 million a year ago, $5 million to $233 million in fees. Just think about that. Think about all the other platforms, all the other trading platforms out there, the banks. What are they going to be thinking? Wow, if Robinhood increased its revenue from $5 million to $233 million, I need to get into this. This is going to drive mass adoption. When we consider the pace, the rate of change of new user growth, it's quite incredible. 115 million new users were added to the crypto global user base over the past 6 months. That's an average of 19.2 million new users every month for the past 6 months. Crypto is really growing. If we look back at the composition of Bitcoin rallies, we're in phase 1. Phase 1 is the bull market phase. Phase 2 is the bear market phase. We're just getting started. Just to let you know, this diagram is on a log scale. Exponential blow-off tops, which characterize the end of the bull run. In crypto, if we look back to the previous cycle, the 2016 halving cycle, we see that euphoria up the top. That is a blue mark. We're not seeing anything like that now. In fact, we're way back here, potentially back here, or we could be a little bit further forward. Looking at realized cap hodl waves, we always have 3 waves per bull run. We've had 3 in the past. We've got 1 now. We expect 2 more. If we look at the current data, that second wave is just starting to form. We're just getting going. When we look at relative unrealized profit, we also have 3 waves. We've had 1. We expect 2 more. Looking at the number of transfers to exchanges across all exchanges for Bitcoin, when we get up to a peak, we see a massive spike in exchange transfer behavior. We're right down here at the moment. We're not seeing any peak whatsoever. We're seeing behavior like this, which is consistent with where we think we are in the cycle at present. Looking at the Bitcoin stablecoin supply ratio SSR oscillator, we can see stablecoins are being deployed into Bitcoin. This is really healthy. We can see the positive correlation that occurs. This divergence was actually pre-telling this particular blow off top and the resulting correction. We see the SSR oscillator going up. That's a really positive sign. In all likelihood, if we go back to the past bull run, the immediate bull run in the 2016 halving cycle, we're probably around this mark right now. You can see there will be many opportunities to get into the market. I feel personally it's a very, very good time to accumulate. The Delta variant has been causing a lot of grief across global economies. Let's look into it. We can see cases in the last 7 days were 4,553,584. That's a 0.8% increase on the cases in the preceding 7 days. We're seeing India, the cases decreasing, Brazil, France is staying still, but that's a good thing. Well, it's decreasing slightly. Indonesia decreasing, Russia, Turkey, Spain decreasing. This is really good news. We want to see a day when they're all negative. We can see total vaccine doses increasing. We're in the 3rd wave. This is the 1st wave, 2nd wave, and 3rd wave. Across the globe, around 31.76% of the world's population is either fully or partially vaccinated against COVID-19. Let's turn to the market indexes. We're looking for early warning signs. As part of probabilistic fearlessness, it's absolutely incredibly important to deal with problems when they occur and not before. Looking across global markets, we can see quite a bit of red throughout Russia, China, Australia. We can also see that Norway did quite well. It's having a bit of a party at the moment, as is New Zealand. Way to go. And Mexico is not doing too badly. Looking across economic sectors, we can see that most sectors went down. Consumer discretionary just edged up a little. Looking at the business cycle, we can see that the US is in mid-cycle phase. Other economies are catching up. They're coming out of early cycle into the recovery cycle. Let's drill into the US market to start with. We can see a very big spike in the VIX. This is the fear gauge of the market. You know, the inverse VIX tends to reflect the actual direction of the market. I'll show you that next. I've just put the inverse VIX here to show you how the down spikes tend to impact the market. We can see a down spike here. When the market gets fearful, of course it tends to sell off. That's just natural. We can see that there's been a very strong uptrend in the Nasdaq. The problem with this is that it really requires a wave down to be sustainable. If we don't get waves down, we tend to get blow off tops and very sharp spikes downwards. We don't want that. What we see right now is that Nasdaq is just really retracing. No big deal. When it gets down to this support level, that will be the deciding factor of if there is a problem in the economic system or not. Right now, it's just natural price behavior. The S&P 500 is just under resistance here, but we can see the S&P has been on a tear recently. The Russell 2000 is underneath resistance, but it came up with an absolute rocket from around the 2nd of November 2020 up to the 16th of March 21. It's really important to contextualize these particular charts. Any weakness in here is not a significant problem at the moment. We really need to keep our eyes on the Nasdaq. The Dow Jones is just retracing to this long-term support line currently. Canada's market is under resistance, heading towards support. Mexico's market is above support and rallying. It's showing strength. Brazil's market is underneath resistance and showing a lot of weakness. Spain's market was just doing very well recently. It's just come back, and now Spain's market has punched through that resistance. It's going up again. The UK's FTSE 100 is just doing a minor retracement. Italy's market is just coming up to retest that resistance. France's CAC 40 has been on an absolute tear recently. It's just doing a minor corrective wave now. The Swiss market continues to show an enormous amount of strength. Germany's market is slightly under resistance. China's Shanghai Composite Index is doing its best to hold on to that support. China's Hang Seng Index is below resistance. There's literally 3 levels of resistance above it. The Nasdaq Taiwan Index is showing weakness. South Korea's market is showing continued signs of weakness. Japan's Nikkei 225 is doing its best to get above this resistance, not having much success yet. Singapore's index is seeking to challenge this resistance line. Australia's ASX 200 is above support and just doing a minor wave down. India's market continues to do very well. You can see that the markets are a little bit mixed. Let's move in and analyze potential recession indicators. Looking at the high yield corporate bond ETF, it's just basically retracing. Copper futures continue to sell off underneath resistance. We need to keep our eye on this. Fortunately, it was not a large sell-off in the past market session. The airline index continues to be sold off. This could be very much tied to the Delta outbreak. The IYT, the US Transportation ETF, is showing a degree of weakness. Nasdaq Transportation, TRAN, is showing much more weakness. The Dow Jones Transportation Average is retracing to support. It's showing a little bit of weakness, but not a lot. The Dow Jones Trans Average is above support. It's just done a wave down in terms of price. The SPDR Select Sector Fund on utilities is starting to show a little bit of weakness. That's actually a good thing. It's important to keep our eye on Brent, on the oil, and as well as copper. We can see Brent oil has lost its resistance. It hasn't been able to get above that resistance. It's continuing to sell down. Light crude oil is also weak, but it's realistically consolidating. If we saw some very big sell-offs, then we start to get worried. We've seen a degree of weakness in the market, but let's just see how it plays out. Inflation comes up a lot in the Fed's decision-making process. Let's have a look at the 5-year break-even inflation rate. We can see it's decreasing. It's now below resistance. The 5-year forward inflation expectation rate is also decreasing. The 10-year break-even inflation rate is also decreasing. If we return to the earlier article about the Fed ending asset purchases, we can see inflation is actually decreasing. What does that basically mean? It means that because inflation is coming down, the pressure on the Fed to reduce or slow asset purchases actually decreases. It doesn't increase. This is actually a really good sign for the market and for Bitcoin. Looking at the T-bond futures, ZB1 exclamation mark, they're just holding support right now. The TLT, the 20+ year Treasury bond ETF, is increasing in price, but it does have some resistance it's going to need to get through here. Looking at the gold futures, we can see gold is coming up against this triple level of resistance. 1, 2, 3. No wonder it's being rejected. That's quite heavy resistance. It will just need to accumulate a little bit in order to get above that resistance. Silver continues to behave with a great amount of weakness. Looking at the TNX, the 10-year Treasury note yield, we see that yield is increasing. The 30-year Treasury note bond yield is also increasing, but with a little bit of weakness. We can see the dollar is actually gaining a lot of strength and momentum. It's on its way up. Looking across the main market, we see Tesla did quite well. Also, a lot of sectors were very much in the red. Let's get into the crypto stocks. We have two classifications in the stock market, the Bitcoin and crypto ETFs or ETNs funds, and public companies that hold Bitcoin or crypto exposure. Let's firstly just have a quick look at Bitcoin. Bitcoin is currently trading at 44,402. It's maintaining this support line at the present time, which is not much of a problem, not any of a problem. We understand that we've had a 64.44% increase. Even if price came down to 38,000, it wouldn't be much of a deal. It could retest this line very quickly and then just shoot up like a rocket. I'm not actually anticipating that, but it could happen. We can see Ethereum currently trading at 30.05. There's quite a deal of support around the 2770 mark. Bitcoin leads the market. It influences all the alts. Bitcoin also influences with great granularity the Bitcoin ETFs. it's really important to understand what Bitcoin is doing. Recently, total market cap came up by 78.59% over the past 27 days. Total crypto market cap is currently $1.884 trillion. If market cap was to just do a wave down to around $1.636 trillion, that's absolutely no big deal. As we're looking at the stock market, it's always a really good deal to understand the major movers. We can see Apple showing a lot of weakness. It tried to get above this resistance, pierced its support line, it's now under resistance. Microsoft is above support and it's just gradually going up, it's grinding. Google is starting to show a bit of weakness here. It's been trying to challenge that upper resistance line for quite a few sessions, not having any success. But as with all things, it may gather momentum and just pierce right through it. Amazon has been showing an enormous amount of weakness for quite a while. It continues its descent. Facebook is now under resistance. Nvidia is selling off. PayPal is showing a lot of weakness too. Netflix is rallying. With the airline sector coming down and Netflix being a stay-at-home stock, this is probably more indicative of the Delta variant fears more than anything else. It's really good to look at these forward indicators. Looking at GBTC, the Grayscale Bitcoin Trust, it's selling off right now. BitC, CoinShares physical Bitcoin, is doing a little bit better. It's just near support. The Purpose Bitcoin ETF is doing better than the other two. It's above support. BTCQ 3IQ CoinShares Bitcoin ETF is doing quite well. It's above support. BTC ETC Bitcoin Exchange Traded Crypto is at support. QBTC, the Bitcoin Fund Canada, is just literally at support. Bitwise 10 Crypto Index Fund is continuing to show weakness relative to the other funds that we've been looking at. The Grayscale Digital Large Cap Fund is also showing weakness, but it was rallying incredibly strongly recently. 21XP, 21 Shares Bitcoin ETP, is just below resistance. VanEck, Vector's Bitcoin ETN, is below resistance. CI Galaxy Bitcoin ETF is above support. OBTC, the Osprey Bitcoin Trust, is showing weakness. BitC, the 9-point Bitcoin ETF, is above support. EBIT, the Bitcoin ETF, is above support. For those new to the station, to the channel, this ranking is by Bitcoin. GBTC Grayscale's Bitcoin Trust has 654,600 Bitcoin. BitC has 48,466 Bitcoin. BTCC has 22,411. You can see how each of these particular funds is actually rated by the number of Bitcoin that they are holding. Just a little fact, I thought I would throw that in for you. Turning now to public companies that hold Bitcoin, these are also ranked by their Bitcoin holdings. MicroStrategy is also experiencing weakness. It's up below support. Tesla holds 42,902 Bitcoin. It did quite well, as we saw in the market heat map. Galaxy Digital Holdings also saw a reversal in price. It increased 10.04%. Voyager Digital increased 6.44%. Square is continuing to show weakness. Marathon Digital, MARA, is just below resistance. Coinbase Global, that holds 4482 Bitcoin, is just retracing to support. Hut 8 Mining Group, HUT, is bounced off support. Bitcoin Group SE, with ticker ADE, is still showing unfortunate weakness. Riot Blockchain is also showing a lot of weakness. Bitfarm Limited's BitF rallied incredibly well. It's just doing a retracement now. Argo Blockchain, ARB, still is decreasing in price. It has quite a bit of weakness here relative to its peers. Hive Blockchain Technologies, HVBT, is just above support. BTBT, Bit Digital, is showing a lot of weakness in the past 4 sessions. Silvergate Capital Corporation. Our channel is community driven. If you have any questions on the content or you would like more explanation on the rules, please let me know. I really want to hear from you. Your guidance helps others, so much appreciated. Please feel free to write in the comments which of the rules that you would like more information on. I'm happy to cover those off, those answers to those comments in future videos. I'd like to share Rule 45 with you. No alt can escape Bitcoin's gravity. This is just part and parcel of the crypto market. At some stage it may change, but right now it's an absolute law. Just to explain a little bit more, what I've done here is put Bitcoin's fingerprint, Bitcoin's price over BitC, CoinShares physical Bitcoin. You can see the degree of correlation is unmatched. This is exactly what we would expect. You see that fingerprint playing out across all these stocks, all these ETFs, ETNs, funds. It's just unbelievable. It's really important to understand the directional bias. See here, even with Bitwise 10 Crypto Index Fund, as Bitcoin rallied up, BitW rallied up too. It had a little bit of problem here. It was weak. This is one thing to always be aware of. When things diverge from Bitcoin's fingerprint, there is something in there that's not quite right. We need to look into it further to investigate what might be happening. But you can see this rounding top and this rounding top playing into each other. There's a bit of a decrease here, little bit of a kick up, decrease, kick up. This is just so common in the crypto market. Sometimes you get a diversion. That's why it's a gravity, because it always pulls that particular thing back to it. You can see here we've got a downward leg in Bitcoin's price. See how it translated into 21XB, 21 shares Bitcoin ETP. This is an undeniable linkage, not just in the crypto asset space, the digital asset space, but also in the stock market. It's very, very important to understand and to track and to follow. Please always do your best to look at how Bitcoin is performing. It will tell you a wealth of information. I hope you found this content useful. Please consider sharing this video if you think it will help others. Thank you to our moderators and admins for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like price updates on price movements in the crypto market, please subscribe to YouTube, and you can join on Facebook and follow me on Twitter. I've left details in the description of this video. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.